Hi students, in this video I am going to explain the depreciation problem from CA Foundation exams past years. CA Foundation past year exam question 2025 May depreciation accounting. Let us go to the problem. On 1st July 2022, Maritime Limited purchased a second-hand machine for 1,20,000 and reconditioned the same. See, second-hand machine means which is already used. Now it is not in a working condition. That's why they have spent some amount for reconditioning. Means to make it perfect to work according to our requirements. That recondition charges, you can say these are all overhauling charges. Sometimes overall charges are given like this. By spending 18,000 over. Now, on 1st January 2022, a new machine was purchased. Again, they purchased another machinery for 72,000. On 30th June 2024, the machine purchased means the machine which was earlier purchased. You should take the meaning of this phrase. The machine which was earlier purchased. Even though it is not given earlier purchased, see, we should understand that machine purchased on 1st January 2023 was sold for 48,000. This sentence is very crucial sentence. Students are failing to understand this type of sentence. This sentence says that on 30th June 2024, what happened? On 1st January 2023, this one, we had already purchased a machine. That machine was sold on this date. This machine was sold on this date. For how much it was sold? 48,000. Like this, you have to understand. If you are able to understand this sentence, almost 50% problem is understood. And another machine was installed at a cost of 90,000. A rate of depreciation is 15% on the original cost every year. On the original cost means this is a straight line method. It means every year we calculate the depreciation on the original cost. Original cost of the machine purchased. Now, show the machinery account from 1st July to 31st March 2025. After reading the question, what we have to do immediately? What are the years for which we have to prepare the machinery account? Should be written like this so that you will not get confused while solving the question. The first year starts from July 1st, 2022 to 31st March 2023. What happened? See here, the question is asking, show the machinery account from 1st July 2022 to 31st March 2025. So the first year starts from July 1st and ends on 31st March 2023. This is the first year. Second year, the very next date of this date, that is 1st April 2023 to 31st March 2024. In the first year, we purchased 2 machines. In the second year, we did not purchase any machine from this. By reading this, you can understand. And in the third year, what is the third year? 1st April 2024 to 31st March 2025. Sold and purchased. One machine is sold and one machine is purchased. Right, you have to write like this. Now, after understanding the question like this and writing like this, we can open the machinery account. Here, machinery account. Debit and credit. Date particulars amount JF. Date particulars JF amount. These all you know. Now, let us go back to the question. On 1st July 2022, Maritime Limited purchased a second-hand machine. Machine is coming in. So, machine account debit to bank account. We are receiving machine, we are paying cash through bank. That's why machine account debit to bank account. That is the journal entry. And in the ledger account, it will come like this. In the machine account, on debit side, you have to write 1/7/2022, that is the date of the purchase, to bank account. First means first machine. For understanding, I wrote just first. You need not write in the examination. 1,20,000. And immediately on that machine, they spent 18,000 rupees. 18,000 rupees. To bank account you should write. Within brackets, reconditioning charges. Same date you have to write. Why this reconditioning charges are debited to machine account? When you purchase any asset, machinery or furniture, whatever it is, till you get the machine ready to work, whatever amount you spend on that, you have to add that amount to the machine cost. Here actually we purchased a second hand machine for 1,20,000, but with that condition the machine is not working, so we spent 18,000 more. Then only it will work. So to make it work, we have to spend 18,000. This 18,000 will increase the cost of the machine. That's why we are debiting the reconditioning charges also here. And after that, you have to see, are there any transactions during this first year? During this first year. First year starts from July 1st, 2022 to 31st March 2023. Purchased 2 machines. Already I have written. By looking at the second sentence, after 1st January 2023, means this date comes in the first year itself. See here, the year ends on 31st March 2023, but he is mentioning that on 1st January 2023, means it is within this year. That's why we are again writing to bank. We purchased the second machine, 1/1/2023, second machine, 72,000 cost. Now, after that, we have to wait till the end of the year and we have to calculate the depreciation on the machines on hand on that date, on the year ending date. So on the year ending date, how many machines we have? 2 machines we have. For that, we need to calculate the depreciation. How to calculate? You better open a separate working note so that your account will look neatly. Here, working note 1. Depreciation in 2022-23, you must write like this. Number 1, on first machine, 1,20,000 plus 18,000. This one, 1,20,000 plus 18,000. Total, it became 1,38,000. And we have to calculate the depreciation at the rate of 15%. Means 15 by 100. For how many months we have to calculate on the first machine? From the date of purchase to till the end of the year. The date of purchase is 1st July. From 1st July 2022 to 31st March 2023. Totally 9 months. So for 9 months you have to calculate the depreciation. That's why I have written here 9 by 12. Now if you simplify it, you will get 15,525. You can do it on calculator. 15,525. Now, second machine was also purchased in the first year. That's why we need to calculate on the second machine also. What was the date of the second machine purchase? On 1st January. On 1st January means it is used for 3 months in the first year. January, February, March, 3 months. For 3 months only you have to calculate the depreciation. Here the rule is, while calculating the depreciation, you have to see the number of months. For how many months that machine is used in the particular year. That is the rule. Now, the depreciation in 2023, on the second machine, 72,000 into 15 by 100 into 3 by 12. 3 by 12 you should mention. Why 3 by 12? If you divide it by 12, you will get 1 month depreciation for this. And if you multiply it with 3, you will get for 3 months depreciation. That came to be 2,700. Now add these two items. This is the total came to be 18,225. This is the amount of depreciation in the first year. So by depreciation you should write on the credit side. Why depreciation is written on the credit side? When you are buying the machinery, you are debiting it. When you are using the machinery, depreciation arises and the machinery value comes down. When the machinery value is coming down, you have to subtract that depreciation from the machinery. That is the basic common sense rule. See, for subtracting the amount, the depreciation amount, depreciation means a fall in the value of asset. Without subtracting from this, you are just simply writing on credit side. Why this? I am explaining in detail. Some students don't know about where to write depreciation. For that reason, I am explaining in detail. Now, after that, you have to balance it. Balancing means first you have to take the total of the debit side, put the amount here, put the same amount here also. From this 2,10,000, this depreciation is subtracted, then the balance, the difference is this one, 1,91,000, 1,91,775. This is the balance. And this balance you have to bring down to the debit side of the next year. This one comes here. Right. This is the opening balance of the machinery account for the second year. What is the date of the second year? Here we have already written the same date, 1/4/2023. Otherwise, the very next day of this date, 1/4/2023, to balance brought down, you should write. Now again you have to see, or you have to read the question to find out whether there are any transactions relating to this machinery, whether any purchases are there or not. Already we have written, we have read and understood that there are no purchases or there are no sales. That's why I have put here dash. Since there are no purchases or there are no sales, directly you have to go to the end of the year, and at the end of the year you have to calculate the depreciation and put on credit side, right? While putting on credit side depreciation, you need to open a working notes like this. Working 2, depreciation in 2023 to 24, that is second year. While calculating the depreciation, you need to be very careful. In second year, how many machines we have on hand, and each machine worked for how many months, means used for how many months, whether you practically use it or not, but machines are there. So how many machines are there from beginning to ending? From beginning to ending, there are two machines. One is the first machine, the other one is the second machine. These two machines were purchased in the last year and they worked throughout the second year. Since they worked throughout the second year, we have to calculate the depreciation for the whole year on these two machines. Now the calculation will be like this. On first machine, 1,38,000. How 1,38,000? This is this one. 1,20,000 plus 18,000. 1,38,000 into 15%. And you need not take 12 by 12 or 1 year like that. You need not take, simple, because we are calculating the depreciation for full year. That is 20,700. Similarly, for the second machine also, that is 72,000. This one, 72,000 into 15%. 15%. 10,800. Now you have to take the total of these two. The total came to be 31,500. This 31,500 you have to write here by depreciation account according to working note 2. You must mention the number of working note. If you don't mention all these working note, you will not get full marks. Now after writing depreciation like this, take this total, means put the same amount here, put the same amount here, this minus this, you will get this balance. This is the second year ending balance. This second year ending balance is to be brought down to the third year as opening balance. What is the date? The very next date. The date is 1/4/2024. You must write to balance brought down 1,60,275. And third mission 90,000. I haven't written 90,000. And during the third year, we have purchased the third machine. That is on 30th June 2024. Before this, actually, we did one thing. What is that? Before this, we sold a machine. We sold a machine. What is the machine sold? Machine sold is the, which machine was sold on 30th June 2024. That is in the third year. The machine purchased on 1st January 2023, means previously purchased, was sold for 48,000. This 48,000 you have to write on credit side. as by bank, because we are receiving money. When you are receiving money by selling a machine, you must write bank account debit to machinery account. If you post the journal entry, that will come on the credit side. Simply to remember, whenever you purchase, you write on debit side. Whenever you sell, you write on credit side. The amount we received is to be written here. That is first point at the time of sale. The second point, on the date, you must calculate the depreciation on the machine which is sold. For that, which machine is sold? The machine which was purchased on 1st January 2023 was sold for 48,000. What is the cost of the machine which was purchased on this date? 72,000. This 72,000 you have to take in particulars column, so that calculation will be easy. 72,000 into 15%, 15 by 100, and into 3 by 12. Why 3 by 12? Because the machine which we are selling in the third year was used only for 3 months. See, this is the third year. The third year starts on 1st April 2024, and this machine is sold during this year. When not in the middle, just one quarter is over on 30th June. So 30th June means from April you have to count April, May, June, 3 months. For 3 months you have to calculate the depreciation, 3 by 12. Now, if you simplify it, you will get 2,700. 2,700. Now what happened? After that, this is the second point. When you sell the machinery, you must write 3 points. 3 items you have to write in the machinery account. One is the amount for which we have sold, that is sale value. Second one is the depreciation amount till the date of sale. Third one is the profit or loss made on the sale of machine. Generally, when you sell any machine, you may sell it for more value or lesser value than the book value. So if you sell it for more than the book value, you will get profit. If you sell the machine for less than the book value, it is loss. Sometimes we may sell at the book value, that time there won't be any loss or profit. But in this case, but every case you have to calculate whether there is a profit or loss, or there is no loss also. See, to determine that, you have to open our separate working. Working 3, profit or loss on sale. First you should take the cost of the machine when it was purchased and for how much it was purchased. Cost of the machine is 72,000 and it was purchased on 1st January 2023. That's why I have written here 1st January 2023. Here machine, first machine, 72,000. This is the original cost. From this cost, you have to subtract the depreciation from the date of purchase to the date of sale. So for that, you have to write less depreciation. First year 2,700. This was already calculated as per working note 1, 2,700, because we used it for only 3 months in that year. And second year We calculated like this. Second year on the second machine 10,800, that 10,800, and the third year here we calculated 2,700. That 2,700 you have to write. If you want to write this as a working notes, you can write, but more working notes will come, not necessary. So add the three depreciations, then you'll get 16,200. 16,200 is put here, and you have to subtract this depreciation from this original cost, then you will get 55,800. This is called book value. Why do you call it book value? Because in the books we are showing that the value of the machine as on the date of sale after depreciation from the original cost, after depreciation, after subtracting the depreciation, the books are showing 55,800. That is called book value. Simply book value minus original cost minus depreciation, total depreciation. Right. The machine which is having this much book value is sold for 48,000. 48,000 is the sale price. Here it is mentioned 48,000. 48,000. It is sold for 48,000. Now what happened? We are selling it for lesser value than the book value. Lesser value means we are getting less money. How much less you are getting? 7,800. This is your loss. If you get same amount by selling it, there won't be any profit or loss, but you are getting lesser amount than you are showing in the books. The difference is loss. That loss is to be written on credit side. Whenever loss comes, that should be credited. If profit comes, that should be debited. This side you have to write. Now you must remember, totally 3 items are to be recorded in the machinery account whenever a sale of machine is sold. Sorry, a sale of machine occurs. And after that, you have to see whether there is any other machine, another machine is purchased in the place of this old one. Yes, a new machine was purchased, that is 90,000. That 90,000 you have to record on the debit side. Now, after writing like this, you have to wait till the end of the year. And at the end of the year, again you have to calculate the depreciation on the machines on hand, existing machines. Now, debit side total 572052, 2,50,275. I think I must be correct. You can check it later if there is any wrong. Yes, 2,50,275. From this total, you have to subtract these items. These items you have to subtract. All the credit items. Bank item, depreciation, profit and loss, and depreciation on the remaining machines. How to calculate the depreciation on the remaining machines? It is given separately as working note 4. Depreciation on 31/3/2025, that is the end of the third year. How to calculate? You have to verify, check how many machines are with us on that date. Totally we purchased 3 machines. Out of 3 machines, second machine is sold. So we are left with first machine and third machine. On those 2 machines, we have to calculate the depreciation. On the first machine, 1,38,000, as we already calculated here, into 15 by 100. Every time we are calculating on the original cost because the problem mentioned on original cost. See, somewhere it is written, right? Depreciation, rate of depreciation is 15% on the original cost every year. Every year means straight line. Again, on the second machine, 90,000, not second, third machine, 90,000. 90,000 into 15 by 100 into 9 by 12. Why 9 by 12? You have to see the date of purchase. When was it purchased? On 30th June. On the same date he is mentioning. On the date of sale is given. On the same date, another machine is purchased. So from June 30th means June is over. From July you have to count. From July to coming 31st March, 9 months. So for 9 months you have to calculate the depreciation like this. Now it came to be 10,125. Now first machine depreciation 20,700. Third machine depreciation 10,125. Total is 30,825. We should not add the second machine depreciation here once again, because already we have written the second machine depreciation during the year. Don't add again. So taking the total, this total is to be taken here by depreciation as per working note 4. Now you can take the balance. That balance came to be 1,60,950. This 1,60,950 will be written as the opening balance of the next year. That is 1/4, that is the year which is starting from 1/4/2025, as writing to balance brought down. So this is the way you should prepare machinery account and this working notes. Without working notes, marks will not be given. Okay, thank you very much. If you like this video, please subscribe and share it to your friends. I hope you all will subscribe. I'll be in touch with you. I'll be teaching all important problems for CA Foundation and other exams. Okay, bye.